Hey everybody, welcome back to the channel. What can I say? Real estate is getting wrecked. Is it time to buy? Let's find out which REITs I'm buying now. So why is real estate getting wrecked? Well, the main thing is the rising interest rates over the last year or two have really cut into the profitability of real estate. Rates went from practically zero a few years ago to now in the 5% range. And anytime the interest rates rise, real estate, specifically real estate investment trusts, end up going down because there's alternatives for investors. If you can get 5% on a treasury bill, why would you invest in an equity real estate REIT that's paying 3 or 4 or 5%? There's zero risk with a T-bill as opposed to real estate. So that's one of the main reasons, and the market has been pushing down the prices of most of all the REITs out there. So let's talk about why that is, what's happening, what might be changing soon, and then I'll talk about some of the REITs that I'm buying now. So first, let's talk about the returns for REITs over the last year. So I'm using XLRE as an example of the real estate industry. This is the Spider Select ETF for real estate, XLRE. So as you see over the last year, they've had a negative 12.76% return, whereas opposed to S&P 500 using SPY is up 8.89 over the year. So that's a 21.65% divergence between the returns of both of these ETFs. That is a huge difference for real estate. Pushing it a little bit further, looking at the 5-year total returns, XLRE has a 5.19% average annual total return to the S&P 500's 10.90%. So again, a huge difference. Now, it hasn't always been this way. In the past, real estate investment trusts have outperformed the market. Looking at some historical data from 1972 to 2021, REITs actually beat the S&P 500 by over 1 percentage point a year. They were at 11.9, the S&P was at 10.7. The past 25 years through the end of 2021, real estate still won at 11.5% to S&P 500's 10.2. And for the last 20 years, REITs have beat them at 12.7 compared to 9.5. So looking at that, you would think that REITs have done extremely well, and they have. But over the last 10 and 5 years, the S&P 500 has beaten the REIT category pretty high. S&P 500 is at 16.5, and REITs are only 12.9 over the last 10 years, and 18.5 and 13.5 over the past 5 years. So if you were investing anytime recently, REITs have not been the ideal choice when it comes to total return. But let's talk about why that might change soon going forward. So the first thing that I will say is the interest rate forecast is going down, and it will make the loans cheaper. Or also lower the rates that people can get on T-bills and bonds, making REITs a stronger alternative. This is from the June Fed meeting, showing what the expected federal funds rates are going forward. So right now, their range of 2023 is 5.1 to 6.1, but look at 24 and 25, 3.6 to 5.9% in 2024, and 2.4 to 5.6 in 2025. So while they're still higher than what we have seen in the past, they are scheduled to go down or forecast to go down significantly over the next 2 years. This will make REITs a better alternative for investors. Another reason why today might be a good time to invest in real estate investment trusts is the valuations are very low. Looking at the XLRE ETF again, this is the historical dividend yield. And as you can see, there's been very few times over the last few years that you can get the yield that you can get now. So we're looking at a right around 3.8% yield right now. And you have to go far back basically to the COVID moment in March and April of 2020 until you can get yields higher than this. Before that, you're looking at briefly in 2019 and 2017. So historically, the yields on real estate investment trusts are very strong right now. Looking at another popular real estate ETF, VNQ, again, you have to go all the way back to COVID to get these types of yields. And before that, 2019 and 2017 again. So as you can see, if you've been a real estate investor, now is one of the best times yield-wise, which means the valuation is the best right now that we've had in a very long time. So if you can buy low, then you're going to get a higher yield and better potential return in the future. So with that, I'm focusing on real estate investment trust this year. And as part of my plan, I'm going to be investing 10% of my new money into real estate investment trust. If you listen to a previous video that I'll post here on the top, you can take a look at that. I broke down my portfolio allocation strategy. And as I mentioned, I'm going to be doing 10% into real estate investment trust. And these are the 10 REITs that I've decided to focus on for 2023 and beyond. So we have ADC, Agri Realty, APLE, Apple Hospitality, ARE, Alexandra Real Estate Equities, CUBE, CubeSmart, HASI, Hannon Armstrong Sustainable Infrastructure, INVH, Invitation Homes, O, Realty Income, SPG, Summit Property Group, Vici Properties, and WPC, WP Carry. So those are the 10 I'm going to be focusing on today, and I'm going to be providing an overview of what each one is and some of the metrics that are involved in each of these companies. And to do that, I'm going to be using a website called allreits.com. It's an excellent all-in-one resource for anything real estate investment related. Okay, so now we're here inside of the All REITs website. As you can see, it's a real estate investing made simple. It has all the resources you could potentially need when you're doing research on real estate investment trusts. We're going to go through some of the details, but up at the top, you can go through, you can add a portfolio, you can screen for REITs, you can get some insights on the different industries within the REIT category, and you can see upcoming earnings. So the thing I like most about all REITs is the amount of data that you can get. You can really get all the information you're going to need to be a real estate investment trust investor. So you can get operational detail like the earnings, you can get the debt levels, the dividends, the dividend growth, the percentage of payout. You can see how many properties and where those are located, as well as insights on the company, as well as current news. One of the things I like the most is the ranking system that All REITs provides. They rank every REIT here in the United States, as well as in Canada, on 6 different criteria. So year since IPO, EPS growth, which is going to be funds from operations growth, payout ratio, earnings growth, dividend growth, and debt. So they take all 6 of those criteria and put it together and provide a number rating between 0 and 100. So when I'm going to go through my real estate investment trust later, we'll see what percentage or what ranking each one of those has. So scrolling back up to the top, if you have a REIT in mind that you're interested in, you can go to the REIT screener and identify the different ones. You can sort by the different sector or scores or the REIT name, anything you want, and find information across the board, both here in the United States as well as in Canada. They are looking to increase the number of countries in the future, but there's just the United States and Canada at this point. One of the things I like a lot is the Insights tab, where you can get all kinds of information about different real estate investment trusts. The ones I like the most is the low leverage and the discounted 52-week high. As most of you guys have known, if you watched my videos, I'm very big on valuation, so it's nice to see which ones are showing the best valuation. Again, if you're interested in a certain industry within the real estate sector, you can click on any one of these and get information on who the players are in that particular subsector of the REIT industry, or you can get some information about the industry as a whole through these. So here's all the United States ones, and then here's all the Canadian ones down below. So a ton of resources here on the All REITs website. It is a free website to go to, but they are introducing a paid version in the next few months. I do have an affiliate link in the description below if you'd like to sign up and get on the notice for the premium version once it is released. If you do happen to sign up for the premium version, I will get a small commission, so I appreciate that, but absolutely no obligation. The free website has a lot of information that you can utilize as well. Okay, going into my individual portfolio, you can add all your different holdings here and you have it all together for you. And it breaks it down by all the different companies you've added. So you can filter or sort by the name, the score, market valuation, anything you want. I'm going to go ahead and rank it by the score. As you see, of the 10 that I'm investing this year, 5 of them have a green rating, and then a few have medium ratings, and then a few have on the lower end. So there are some speculative names in this list, but I'm trying to develop a well-rounded portfolio. And just because it has a low score doesn't necessarily mean it's a bad REIT. It just didn't qualify on their 6 different criteria. We can talk about that. So scrolling back up to the top, I'm going to go ahead and start with realty income because that's seems to be everyone's favorite. So when you open it up, you're going to get all the details of the company, a brief description, how long they've been in business and how long they've paid a dividend, the overall ranking score, which again, this has got 100%. You can see the price history as well as valuation. So currently, realty income's at 14.3 price to AFFO, when the historical average is 17, so showing a good value. Shows the total returns over time, as well as the dividend payout and the dividend growth. The payout ratio is very reasonable for a real estate investment trust. And you can see all their financials. So AFFO is up and to the right, debt to assets is stable, and the occupancy is an amazing 99%. So you can get a lot of information on the REITs here on this website, but this one is realty income. Going back to our list, the one that I'm really excited about right now is Alexandria Real Estate. They're a life science office REIT. So you probably think an office not good, but what they do is they have the pharmaceuticals and the life sciences industry rents out the space. And that's one of those industries where you can't really do it from home. You do need to be in the office, you do need to be in the lab, consulting with other people and doing tests. So Alexandria has a great niche in the market. And again, they're ranked 100. You can see the price. The current valuation is excellent at 13.4 compared to almost 20, the historical average. They have had a rough year, but historically they've done very well for investors. And you can see the dividend payout. They are a quarterly dividend payer at this time. And as you see, over the last 23 years, it's been increasing the dividend over time. Dividend growth is averaging about 5.5% and a very reasonable payout ratio. Scrolling down to the bottom, you can see where they're located and what types of properties they have. And you can see the overall history, a 93.6% occupancy rate, and they're growing the size of their business over time. All right, moving on to some of the ones that are maybe less known. The one I really like, Invitation Homes. They are the largest operator of single-family home rentals in the United States. And as you see, it doesn't quite get a 100 score. The only one that is ranking low on is the year since IPO, because it's only been around for 6 years. But in that time, it has had substantial returns, and it's showing strong growth in the dividend, which I'll show in a second. So the current price to AFFO is 23.1. with a 5-year average of 25.8. Scrolling down, you can see the dividends have been increasing very well. The dividend growth is over the last year is 18.2, and the 3-year average is 20%. So having a 3% starting yield growing at a 20%, that's an excellent opportunity to make some long-term money in dividend payouts. AFFO is growing over time, debt to assets is staying low, and the occupancy is excellent. Scrolling down, you can see they're a residential, single-family, and real estate-focused investment company. All right, Hannon Armstrong is one of my favorites in the renewable energy space. What they do is they make loans to companies who are in the sustainable infrastructure. So they finance long-term projects for companies who are focused on climate change. So this is more of a mixed bag when it comes to the ranking system. Some things are good and some things are not so good. So let's take a look. Price has been suffering lately over the last year, it's down 38%, but the valuation is very reasonable compared to the historical average. And they have been consistent dividend payers and dividend growers with a 5.3% 1-year dividend growth and 5.1 and 4.2 3-year and 5-year. Unfortunately, the payout ratio is very high, so this might be something you want to consider. It has a very high yield right now because, generally speaking, your green energy companies have had a very rough year, and HASI is no different. So scrolling down, you can see some of their financials, as well as some of the press releases about the company. Okay, so moving on, another one that I really like a lot is Apple Hospitality. Don't get us confused with Apple Corporation. This one actually invests in real estate hotels. So things like Marriott and Hilton, they own the buildings that those companies are using. So getting a 95 ranking, and the only thing that is causing it not to get 100% is the year since IPO, and it's only been around for 8 years. The returns have been very rough over the last few years. As everyone knows, during COVID, most of the hotels had zero business, and so they've had a hard time, but they have been roaring back ever since then. They did have to pause their dividend, but they have reinitiated it, and they also paid a special dividend at the end of 2022. So overall, the yield is 6.6% right now, and because they just restarted their dividend growth is very high, but their payout ratio is only 60%, so they still have a lot of room to grow, and more than likely, they'll be back to where they were pre-pandemic before you know it. So scrolling down, you can see their financials, as well as their property types, and again, hotels is 100%. They have almost 29,000 hotel rooms throughout the country. I'm actually going on a trip for work in a couple of weeks, and I'll be staying at one of their properties, so I'll have to report back on how it went. Okay, so that's an overview of the All REITs website. Again, if you do like what you see here, definitely check out the link in the description below. Sign up for their portfolios and take a look. I find it to be an excellent resource for all REIT investors. So going back to my portfolio as a summary, these are the 10 companies that I'm going to be investing in this year and going forward. Alexandria, Simon Property Groups, WP Carey, Agri Realty, Realty Income, CubeSmart, Invitation Homes, Vici Properties, Hannon Armstrong, and Apple Hospitality. Hope you guys enjoyed this video, and we'll see you next time.